All right, guys. So today we're going to talk about something that I talked about in a video a long time ago, but I think is important to go back over these kind of topics every now and then, every few years, because I think they're very, very important and can really make the difference if you're interested in backtesting and you're interested in the algorithmic side of trading, to make sure that you're in the journey in the correct direction. So let's just get right into it right away with the title of the video, which is how to make your back tests close to reality or close to real life. This is a very common problem that people have where they go into, let's just get started, they go into their goal of back test and they think, I want to make a pretty equity curve. I want an equity curve that starts at the bottom left and it goes right to the top right and it just straight up in a line with no pullbacks, and that's my goal. Also, they may think my goal is to make a bunch of really great numbers, right? To great, I wanted to say that the profit factor is amazing, and I wanted to say the win rate is amazing, and all of these things. But that's not the reason. That's not the reason we backtest. That's not the goal. The goal of a backtest is to find out what is the real world going to look like when I start trading, right? So if we're not doing things to make our back test very close to what the real world's going to look like, then we're very much wasting our time, right? So this is the main focus I want to put in here. And it's, if you're coming to this video because Trade Ideas sent you to this as support, there's going to be a lot of takeaways for you as well. When it comes to Trade Ideas and their backtester, that's the one that I personally use and recommend for my own trading. So the first issues to watch, things to note before we just get right into what to look for and what not to look for, is you haven't hacked the matrix. You haven't figured it out. If you have a strategy that is just looks absolutely perfect, and I'll show you what that looks like in a second, you should be very worried, right? Every strategy out there that's real has times where it does well and times that it pulls back, and times that it does well and times that it pulls back. And your goal as an algo trader is to find out what times it does well and make sure you're getting into it for those reasons, and what times it pulls back and make sure that you're not as heavily invested in those strategies for those reasons. Another issue to watch out for is Trade Ideas backtester, and most backtesters out there use the high-low open-close data of 1 minute candles to track through. So if you're trying to do sub 1 minute trading, it just will not work. Your results will not be accurate, and they will mislead you into maybe trading something that isn't going to work in the real world. So then the question is why? Why 1 minute candles? Well, the main reason is that you're not going to beat the HFT firms. I kind of hope that this crushes the dreams of some to at least make sure you're not using your time and money to try to do this, but you're not going to beat through a retail broker, right? And for those who don't know, a retail broker will actually sell your order flow to an HFT firm so that they can make money. So if you're then trying to use a retail broker to do HFT style trading, it just won't work because you're selling your order flow to your competitors. The other thing to keep in mind is that real HFT firms they're talking in microseconds, not even milliseconds. They're talking microseconds. They're shortening cables to the floor. They're trying to increase the time that an order goes from their computer to the floor. And we're talking the speed of light. They're trying to shrink that speed of light ever so slightly. So to think that you can just get an off-the-shelf product and backtest something and auto trade it through a retail broker, wherever you are in the world, and all your it's getting routed through all these orders, and you're going to compete with these HFT firms, it just will not happen. So again, if you're looking to do that, I would highly suggest abandoning that. But if you are looking to do that, the Trade Ideas backtester is just not for you. The other thing is too tight stops and targets is another thing I see a whole lot, where people are trying to buy a stock and risk 2 or 3 cents. Before you start auto trading, I would suggest taking a course, and I have one on this very channel, which I'll link in below, that teaches you about order flow. It teaches you about bid and ask spread and things like this. If you're trying to buy a stock and get away with a 5-cent stop, it's just the way spreads work and the way things open. It's not going to work out for you. So realistic expectations. So there's been a lot of math done. There's been a lot of studies done on different hedge funds and trading firms and trading philosophies. And we find that trend following systems are correct 50% of the time, generally max. And these are purely automated type systems. Mostly a trend following system is more in the area of 30 to 40% correct. But, when you're following the trend, the hope is that you get way, way more than you're right than you lose when you're wrong. So if you're getting something that's 70, 80, 90% correct, I go back to you have not hacked the matrix, right? You just haven't done that. So you need to figure out what's going wrong. Now, that may mean taking it to a paper trader, which Trade Ideas has built in, and seeing what the differences are. And I'll show you how to do that in a second as well. And revision to the mean strategies are just right a little bit more often, but you make way less when you're right than you lose when you're wrong, which isn't ideal, right? So if you have a trend following system that has a 50% win rate, that's fine. If you have a revision to the mean system that has 60-ish% win rate, that's also fine, but just note that there's these risk reward trade-offs. The other thing is your profit factor. So profit factor, simply put, is the sum of all of your winners. So for example, if all of your winners, you've got 10 winners in the strategy and they total to $300, you would divide that by the sum of all of your losers. So you sum up all the losing strategies and say you lost $100. Your profit factor would be 3. When a profit factor gets over 5, you start to be worried. If it gets up to over 10, be very, very worried. Because again, you haven't hacked the matrix. So let's get into 2 examples here real quick. So I have 2 strategies. And first I have the one that will make everyone's eyes go big. And they go, oh, that's amazing, right? But if you ever ran a back test like this, what's the first thing that you look for? Well, you've got a profit factor near 10, right? That's probably means you broke something in and of itself. You have a win rate of 95%. Will not ever happen in the real world. Just isn't the way things are going to work. One thing to do right away is you can double click on these windows right here and you can bring up these strategies. And what you'll see quite often is trades in that sub-minute, 2-minute area, right? Enters at 10:30, exits at 10:31, right? 1-minute candles for each of the back testers, so this isn't it. And I intentionally broke this, obviously, to do this for you. So this is going to show all the bad things, right? 30-second trade right here, right? Another very short trade here, another very short. This one's probably more correct because it's a longer term trade. But again, you can see that these are not. They're not it. They're not the way you're going to go with this one. So what did I do here, right? I built a strategy that's looking for stocks that are running up really, really high, and I put a profit target. I'll show you. I put a profit target at 50 cents. And these stocks have had to have moved $2, $3 in the last minute in order to have a 50-cent target. So I've gone from the things are based off 1-minute candles, and then I went over to profit targets that are too tight. If you're looking for something that's going crazy, then it's going to maybe think you get filled when it didn't. And that's really what this all boils down to, is how much are your fills actually going to be. So that being said, this is one that looks a little bit more sensible, right? It's a 55% win rate. It's a trend following pullback system. The risk reward isn't that good. That's what I would focus on working on here. And the equity curve looks like it would make sense. There's times where it does well, and there's times that it doesn't do well. Overall, in the long run, this is a money-making strategy. So again, you want to make sure that you temper your expectations. Now, what if I really wanted to test this. I think I did, maybe I hacked the matrix. Maybe I'm the one that figured it out when no one else could figure it out. If you want to test this, well, what you need to do is you need to either move it to a live trading account with a very, very small amount of money, so you're not taking any hits or losing anything, or a paper trading account, which we have built into Trade Ideas, right? If you have access to the backtest or you have access to this paper account, and then you want to start trading it. Now, when you trade it, you want to export those trades and put them in an Excel or a Notion or somewhere that they can be tracked later. And then from there, you want to then go through and compare these results, which Trade Ideas which Trade Ideas gives you in great detail versus the results that you got every day, and see what those differences are. Again, you should do this with all of your strategies, not just the ones that look a little bit too good. All of them should act like this. Every day you go through and you say, okay, these are the fills that the system expected to get. And then you go over and you say, these are my fills, and you track the difference. Because, for example, if you're losing on average 10 cents on every trade, right, you want to add that to your system. And I added that in the wrong column, just a second. So if I'm losing 10 cents on every trade, I want to go through and I want to do that. And that's going to adjust my equity curve. If I find that it's more, say I'm losing on this one 50 cents on every trade, you want to then go and look at this, because now that difference in slippage has turned it from a profitable strategy to a negative strategy. And that's what would happen in something like this. A, you're not going to get the exit because of the closer than 1 minute time frame, and B, you're just not going to get filled on these things that are crazy. And now the projected annual return went to, you'll lose 84% of your money over the year if you trade this, right? So be very careful and understand your goal, and start from your goal as someone who's running a backtest. It is to help you find some sort of edge in the market that's going to eke out your edge over your competition, right? So you're going to have some backtested knowledge alongside your all of your other knowledges that you're gaining with technical analysis, statistical, fundamental, all this, but you're going to have these little backtest results. So I would more look at a strategy like this and say, okay, can I, as a person, make this trading strategy better? But again, I would do the same thing where I would double click on this calendar here and I would look, these are the fills that I expect to have, right? I can see right away that these two wouldn't have worked out, because that's in and out an hour, so that might be okay. And go through and say, this is right. This is WBA. It's supposed to have entered at this time down to the second we give you, and it's supposed to exit at this time down to the second. And here's the fill price, and then the exit price. And then what your job is to do is say, okay, how close is that back test to the simulated world, knowing that what's going to happen in all cases is the simulated world is going to be worse than the back test. And then the real world is going to be a little bit worse than the simulated world. So since you know you're going to degrade this way over time, you want to make sure you see by how much, and is there anything I can do as a trader to mitigate that? So again, I just wanted to do this video again. I really think that this is a huge topic that a lot of people don't pay attention to, because it would be very easy for me just to say, look at these amazing back tests, trade like this, and you'll make a bunch of money. But that's not the real world. And again, the point of a back test is to make something that you can take your time and you can translate it into something that's going to give you an edge over the market in the real world. So don't ever really lose sight of that.